The South African listed property sector had a very strong rally in the final quarter of 2020. I think this rally was sparked by very positive news coming from vaccine developers during the month of November, who announced that their vaccine candidates aimed at fighting against the coronavirus proved to have a very high efficacy rate during phase 3 of the vaccine trials. I think these positive vaccine breakthroughs raised hopes that the pace of the economic recovery will gain further momentum and revive many of the industries that have been negatively impacted by COVID-19 restrictions, including the South African real estate sector. So if we step back and look at equity market performance for the quarter ending December 2020, the South African listed property sector outperformed other asset classes over the period, posting a return of about 22%. Over the same time period, the Swix All Share Index ended the quarter higher by about 9%. The All Bond Index closed the quarter up 6%, inflation-linked bonds 5%, and cash ended the quarter up 1%. What was noticeable though during the equity market performance of the fourth quarter was the rotation out of growth and quality companies, also known as pandemic winners in 2020, into value and small cap stocks whose performance generally lagged throughout the year. This theme was evident in the real estate sector as well, as we saw the quality to value rotation driving share prices of companies that had significantly underperformed throughout the course of 2020 to relatively higher levels. In certain instances, this resulted in share prices of some REITs even doubling from lows that they were trading at throughout the course of the year. That said, what started as a relatively strong and positive quarter on the economic front somewhat ended on a relatively somber note as coronavirus cases started rising in Europe, leading to various European countries reinstating lockdown measures aimed at controlling the spread of the virus. This was the case in South Africa as well, as the country experienced a second surge in new infections, which surpassed the peak that was last seen in the middle of June of 2020. I think this prompted government to impose further lockdowns towards the end of December. I think as investors, this is the reality that we need to contend with until such time that the country attains some level of herd immunity. So with that, we think 2020 will remain quite a challenging year economically and consequently for the real estate sector. But challenging as things may be, we can only focus on what we can control. As such, we continue to position our portfolios to be invested in well-capitalized businesses, which we believe will be relatively resilient in a weak economy.